if there is a pullback of 38.2 that you want to see respected, is really the top end of this previous
All right.
area as well at 461.50.
Let me get
So
back
if
to
that
doing
tries
some
to do
day
something like
trading
this, I
on
believe
my
we can make
simulator
a
over
play
here with the
that's still
strategy that
looking
I
constructive for
continue to
possible
construct.
time. Right, so
Um,
461.50 would be that weekly 38.2. Now let's bring out the volume
there's
profile
never
and
such
let's just
thing
set
as
this
a
in front of
perfect
us. So
strategy,
open
but
6
there
minutes from the start.
is a
And
good
see what's
enough
going on.
strategy.
We're sort of, again, some alarm bells should be going off. Look at this like high volume node area. It's rejecting in that upper wick. You're not really seeing clean follow through that level into the equal high. And once again, as I've already made notes, to me this just means shorts more favorable in the Nasdaq and longs
See,
more favorable in
look
that
at that
S&P
camera
500.
on her.
Let's now drop it on down to a daily time frame chart. How it's
Yeah,
doing
there
in
we go.
QQQ. We'll evaluate the weekly expected move and take a look through all of the meaningful indications. So, expected move here, upper bound is at 491.56. Lower bound is here at 468, my apologies, 20, give or take. It's the top end of this gap from over here. So the overall suggestion is a
Need to
higher
get
high
a
in the recent trend count from here up to here. And I would
camera
argue
that
this is
sits
still
on
in
top
theory a higher low of
of
lows,
the monitor.
soft higher lows. I wouldn't even really count it as that soft higher low here, considering there was no follow through still. This could apply some sort of throttle daily, so the trend change here is still very much so underway. Similar to the S&P daily, not the weekly but the daily, we do have this indication from a point A to a point B higher high that is on the table right now. So we are technically in a daily uptrend here. And once again, I think this zone can offer a possible higher low. Now, if we're thinking about the one time framing, similar comments emerge here, but notice that the Friday close was not as strong as the S&P 500. That's really what gives us that upper wick on the weekly bar anyhow. So Thursday does engulf the Wednesday and Tuesday session. We close right at the daily 50 SMA, and then we use that as an equal low on the Friday session. So to me, it's very clear that any sort of breakdown underneath 475 really opens you up to this gap close opportunity on the daily time frame. That's what we would look for if you're a seller trying to navigate a deeper pullback on the QQQ. That's really what you want to participate in. If you're looking for consolidation, then it's exactly that, just bull flag consolidation. Let's not lose sight of the fact that this is absolutely a bull flag. If there is no breakdown underneath 475, it's bullish consolidation over the top end of this previous range, looking for the Swiss cheese gap to close overhead and test that upper bound of the weekly expected move. We've got 488.50 up into 493.10 as the gap closed overhead, and that would be a higher high in the trend count, breaking out of this, what I would consider, multi-day balance range as of right now. Let's drop it on down to let's go to the hourly chart, and let's see what else we can learn. There's obviously going to be some nuances here. You can see that we did preserve a lower high on the hourly, so that is
Listen to a new channel over here.
I'd like to see another lower high, keep us for consolidation underneath 480.50.
The guy sounds like he knows what he's talking about. So
right? Then the trend would look like this: highs, lower highs, possible lower highs, and then we start to threaten what? Of course, the issue becomes a descending triangle, and any sort of lower high brigade bolt here underneath 470. What's the gap that we were just referencing? When we get here, I want to be very clear, right? I know we're talking about a little bit more weakness in the QQQ NASDAQ. When we get towards this gap close area, I would still be thinking about gap fill reversal for a daily higher low, considering that the trend has changed, right? So how might that look? Well, consolidation gives us like this descending triangle. We break lower high in here, it's bearish. We close the gap, rally, sweep. This is my favorite setup ever. You guys know this if you've been around the channel for any period of time, but
inverted head and shoulders.
So insightful because this new low traps a whole new set of shorts. This makes them nervous and possibly gets new longs interested, and then the breakout is the nail in the coffin for any shorts from down here. And you also get not only buyers on the first higher low, but buyers on the breakout. So that's what I would be looking for around this gap close indication. That to me would be a picture perfect daily higher low opportunity, retargeting 475, and ultimately equal highs over time. If you just get big consolidation up here, treat it for what it is. Range here at 483 is really what gets interesting for a move to test.
Let's double down on that one.
488.50, 493.10 is the gap close. If we bring out the Fibonacci's on the hourly,
let's do the Fibonacci's too.
the lows are not quite respectful of the 38.2 you are testing the 61.8.
That's
And if
not
you
it.
fail the 61.8, which is the key level we just described, that would be great confidence. Also, the daily 50 estimate as well in blue. It's that moving average, so that's making sense. And we can also come in here with, of course, our intraday anchored VWAPs. We made some progress to close above, not nearly as strong as the S&P, I would argue. If we drop the 475, you're underneath the entire cluster, whereas the S&P still has some underneath you. Right? So I think that these additional indications are aligning with the concepts that we've already described in the NASDAQ. Let's jump on over to the NASDAQ internals because even though we're bearish there relative to the S&P, you still had strong volume inflows. The advanced decline line was well over trend higher zone, and the cumulative tick was positive as well. No issues out of the exchange level, so still bullish at the exchange level, but relative to the S&P, if the broad market pulls back, I would want to short the Nasdaq and stay away from the S&P. If the market breaks out, I would want to long the S&P and sort of let the QQQ be the laggard and do its thing. Let's jump on over the market profile of the NQ futures, and we'll see what we can see. Notice that this is much different than the S&P voting on the Thursday session. Value did not migrate lower with price. Point of control did not either. And technically on the Friday session, you have inside value, but a lower point of control, absolutely. Decent excess highs, decent excess lows. It's a classic inside bar. I would sort of maintain a patient stance. We just go back on over to the Q because of what we just saw. Right? Obviously, value is inside here. Um, it's a patience play inside of this range, monitoring for bearish, developments possibly for this descending triangle. But the action item really steps in underneath 475 when we break this confluence, right? Just like to the
I was
upside,
too confident in that
sort of like neutral consolidation. We don't really respect that
block order.
lower high. This is the action item over the top of the balance at 480. NASDAQ. Let's finish up the broad market with, of course, none other than the IWM. Let's reset this a little bit and get ourselves up to a weekly IWM. And what do we see? So first and foremost, let's clear up the current set. Huge improvements back to the upside. Let's not get too sidetracked with it. There's some things to talk about here. But let's start with candle structure and location. Solid green body bar. The range is as large, if not larger, than the previous two weekly bars, so that does seem constructive to me for continued bullish improvements. We're not yet at the equal high on the bar to bar count. We do have bullish interactions here, higher low, higher high, but not yet at the equal high to this sort of squeeze, if you will, from back over here. I think that this is a lot of continued bullish developments. Reason being is this, for the most part, captures my attention. The market easily could have, came up, tested this, failed, and if the weekly bar, this is right? If the weekly bar
divergence, divergence, divergence. Just keeps on saying take profit,
take
take profit, take profit, take profit, take profit.
Possibly failing back down into this
take profit once,
really
twice, three times.
Small caps and the growth there starts to scream, R word, recession coming around the corner. So we've got some additional indications. Speaking of the R word, we're talking about KRE regional
trend change indicator going off here. This indicator looks like it bottomed.
This massive improvement, the fact that
it's got to wait for the whale dump indicator to disintegrate,
that's a big improvement and sort of
dissipate,
to get us further away from the R word. The recession word
doesn't vanish.
If this is moving higher. Here you could say similar things about
there's
RT, which is going to be your retail
you can see
sector, right? Notice that we're back inside of the range here.
How
set some sort of lower high and come back down underneath.
See here, let's get the drawings for a while with a trend.
Overhead supply, but we're basically back at the equal. So what's the classic pattern?
It was like a double bottom here.
Range, we're home.
Oh, I got it on
black. Staying out of this larger lower band. So even for like another risk on
right there,
perhaps sector, if you will, could be biotech.
Then it moves.
Coming into these equal highs instead of spending time inside of this.
And that's the top.
So small caps and using these
additional right about here.
Bullish improvement with the how rapid and aggressive.
So that's this was 1, 2, 3.
As we start to bring in some additional
now it's currently on this scenario here.
What I want to point out is that the first higher low pullback after the
then you could see it here with all those divergences right there.
The highest high anchored view out here has also been recaptured. Right? So that's bullish progress as well. If we bring out
now it snaps up. On this one, it's on the bottom end. I need to recalibrate this indicator or this
If we
cycle.
just come in, let's remove that one, and we come in from the low up to the high, we know that we're of course over 38.2 here as
Probably.
well, which is a bullish improvement. And it's been that way. And namely, the point is just reinforcing that we never rejected for a lower hack stay.
They're
Sort of no major
dissipated
value
there.
in this area here. So the weekly chart is improving out of small caps. I like what it's doing so far. Volume profile, just to keep it congruent with the other market indexes we've looked at so far. This one we do want to take a look at the low volume void. Right, we've rotated through that quite easily, and now this is kind of the next magnet, or should be magnet for the market. The high volume node is where the market's seemingly most efficient of small caps, aiming at that equal high. Let's bring it on down to the daily time frame chart now, and we'll jump back over the smalls here. And the main takeaway is Friday's breakout, right? Obviously, the market was very, very choppy prior to that, and the threat was there for the possible lower high here. But Friday's breakout comes on the heels of Jerome Powell's speech at Jackson Hole. Obviously, we know small caps being very sensitive to
Go ahead and
economic policy
take some
from
money
the
off the
Fed.
board.
That there is kind of a signal that markets are interpreting Powell's comment as being just bullish, quite frankly. Not necessarily recessionary or, oh my goodness, the labor market's going to break. Powell was sort of harping on that nonstop. He really wasn't. He just made a brief comment that, hey, we don't want to see continued cooling in the labor market. We do believe inflation's on a sustainable path back down to 2%, even if we do start cutting rates as soon as the next meeting. He basically confirmed there's going to be a cut, and I think the most appropriate cut is going to be a 25 basis point cut, 0.25%, right? I think any more than that gets a little bit dangerous. We'll talk about why in the fundamentals, but that ties directly into small caps and their performance. So Friday, big day to the upside, inside of this overhead range. Huge progress now means that there's plenty of opportunity for a retest higher low over the breakout point and to stay inside of the previous range. That area here is the lower bound of this week's expected move, around 215 flat. If we're just and here's the other deal, right? Obviously, the market's trying to work its way back up towards these highs, but this is just a huge balance. This is a choppy range. I would not be overly aggressive on trades in the IWM. I would more so use this as a gauge for the S&P. It's a grindy move higher. If it's slow, it's fine, whatever. But as long as small caps remain elevated, that would be a bullish sign for your S&P, in my belief. Once again, your big line in the sand. Keep it simple here in small caps. It's 215. If you're above, it's bullish. If you're below, a little bit more of an issue. Let's take it on down to the hourly chart. What else can we learn here? Again, put yourself in the shoes of a seller. Let's really dive into this. If you're a seller, this of course is a double top. On Friday, you don't want to see an open here. You want to see an open inside the double top range, possibly for a threat of the lower high there, triggering the double top. 1, 2, here's your neckline breakdown, right? Possibly we could even call it a man ray pattern, dare we say. So that would have been bearish, right? Obviously not the case. Huge reaction to the upside off of Powell's commentary and bullish digestion into the afternoon to solidify and, in my belief, really offer more of a confirmation of that move from earlier on in the session. So far so good. This is of course bullish, looking for upside. Again, I keep it simple and smalls and just use it as a sentiment gauge for your market overall. That's the hourly chart. We can intraday anchored view apps. What do we see? This is really funky for me. It's not giving me any bars to the right. So let's do it manually. All right, here we go. Over all of them, this is offering confluence at the 218. This is coming from Thursday's open. If you use the gap up, this is coming in here at the 215 line in the sand that we had also just described. Let's take out a fib just for the Friday session from low up to high. 61.8 is slightly underneath the 218, so as long as we're over that, again, I would tend to have more bullish stance earlier on in the week. If we started to drop 218, started to become a little bit more concerning for 215 test. Not the end of the world, but just a test there. Probably some consolidation, maybe a pullback in the NASDAQ, but nothing major. And then if we were to drop 215, okay, now we're starting to question some of the indications that we just walked through. That is it for your IWM. Let's move on over to the Russell internals. Did we get exchange level or really index level confirmation? Yeah, bullish volume inflows over trend higher zone, cumulative build out of the tick. It does start to look a little bit short squeezy to me. This shape right here is always a bit more indicative of short squeeze versus the 45-degree line, which is sustained buying throughout the day's session. It's not the end of the world because we didn't get back to the zero line into the afternoon, but keeping an eye on that. I want to make sure that stronger buyers are truly getting involved. Sort of this and this would outweigh, if you will, the possibility that maybe that was just a short squeeze. To me, it does seem as though buyers are involved. You look at the Russell breadth ratio, 17 to 1 on the close. Some pretty substantial buying volume into the afternoon. Let's finish it up in the IWM, or rather just the Rusty Rut, with our futures and of course the market profile. T-shaped profile, no shocker there, considering what the chart just looked like. So, typically that shape would indicate short squeeze, emotional buying, emotional short covering through A and B periods. Value did move higher, point of control was higher, sort of got a normal curve up here towards the top. I think it's very straightforward. 218 is basically going to be if you were to get some sort of breakdown underneath value or low. 215 would be back down here around 2190. We had been using 2180 on the Rusty Russell future, so I would use that 2180 as 215's equivalency from the IWM. And that is your small cap indications. Let's keep the show going with a look through our sectors in the S&P 500 specifically. So first thing is the weekly performance. What do we see over here? Notice that real estate leads the pack on weekly performance of
Yeah, real estate, commodities,
as well as consumer discretionary. At the bottom end of the barrel, it's the energy sector, and then you're seeing laggards by not being up as much, but still green here. Semiconductors, communications, as well as utilities. So I'm not.
Yeah, utilities are great during our session.
Lightweight sector, but notice that the market did not. The market was not breaking out big time and trying to set some new all-time high. So posture is not concerning. The fact that we only have one red sector is not concerning. The fact that it's the energy sector, a little bit concerning. Economic slowdown. There's been a lot of talk about that in China specifically. We'll talk about GDP as we get into some of the more fundamental stuff. But let's take a quick look through the charts here and see what's going on. Real estate, nice breakout, interest rate sensitive. When Jerome Powell basically confirmed, yes, we're cutting rates, and hey, it's time to really start dialing things back, changing the Fed's policy, off to the races. So this to me is it's a double-edged sword, right? It's a really lightweight sector. Whenever it makes a new swing high, of course, it's bullish pressure for the S&P. But we know that services, specifically housing services, generally speaking, housing prices, housing costs for consumers, were not the best read out of CPI on the last release. If you recall, it doubled on the month over month from a point 0.2 to a point 0.4. And the fact that this is breaking out, the fact that Jerome Powell is cutting rates with markets near all-time highs and really housing prices not suggesting on a month over month basis that we've really done much cooling. This was like the best read we had. Worse. I don't This makes me a little nervous about the inflation rebounding story here and how confident Jerome Powell is in terms of getting inflation to 2% even as they're cutting rates. I think that for this reason,
that's head and shoulders pattern.
Charts, the real estate
we'll see when it broke.
Generally, what we're seeing out of this relationship, I think it would be a
would have been right there.
Step if Jerome Powell cut by 50 basis points.
Shoulder, head, shoulder, break.
I don't think the Fed is lagging that much. I don't think that the labor market is.
Oh no, it's going back up.
I know this is a bit fundamental. We'll get back to the technicals. This chart here specifically is telling me a 25 basis point.
It's supposed to bounce.
Back to the fundamentals, like delicious pizza, exciting games, and family time. Like, buy one, get one half off. Buy any pizza at any price and get a second pizza of equal or lesser value for half price.
Peter Piper Pizza is the place that people pick.
Is the most appropriate thing to do if we're worried about housing inflation coming back and driving CPIs, PCEs back higher. That's my conversation there. Materials, still inside the range, nothing to say. XLY, strong improvements into the end of the week, specifically Wednesday.
Ew, this might be a losing trade. Well, it says it's going to go up. It's still in this up area here, that turned green, that turned green. Oh no, can I trade myself out of this trade without taking a big loss? Well, it's
mindful of some weekly lower highs on the sector charts. XLY is one of them. XLI looks great, breaking out to new all-time highs, bullish for the market. No comments there.
If it holds the trend, at least retrace a little bit, I would think.
Even if it breaks down under 154, so that's with one comment. Looking for a higher low retest off of 150, 150. No issues, not overly concerned. Consumer all-time highs, bullish for the market, right? Financials look absolutely stellar here. on this breakout through the three equal highs. I was thinking that maybe pullbacks are possible. Remember what we said on Wednesday? The lower wick of that Wednesday bar that then closes inside of Tuesday's range.
Damn.
To be seen. That follow through on Friday. XLK is one of these charts where we want to keep an open mind, right? Possibly a weekly lower high, just like what we talked about in the QQQ. But for now, in the immediate term, I would be thinking more about daily higher low as long as we're over 218, the top end of this previous range. So if we can just consolidate here, fine. Call it a bull flag, and over time, excuse me, we'll make some more progress to possibly close the gap and battle for the equal high. If we get under 218 back into this range, start firing off. That would be a top watch. XLK under 218 with acceptance becomes a little bit wishy-washy in terms of how confident we are in this reversal. Next up, we've got utilities. Looks fine, grinding away in the upward direction. It's not like it outperformed on the week. The market also didn't break out. Not concerned posture-wise. XLC looks great, sitting at these equal highs. It's all-time high. Consolidation breakouts look awesome. Continued bullish pressure. Even if it pulls back here, higher lows over 85 are fine, noting where we're coming from, not a lower high.
Still got some time.
SMH Semiconductors, lower high on the weekly, yes. Retest of the double top neckline, absolutely. So
top
be
neckline.
cautious of this area. I would tend to say that this is already a little bit more uncertain than the XLK, even noting that this range was already threatened underneath 247.50. I wouldn't say that this is the end of the world. Of course, we still are acknowledging that these higher lows, call it bull flag, call it inverted head and shoulders, it's the beginning stages of a trend reversal. But I think we want to give it the respect it deserves. In here, I'd be a little bit more neutral and saying, okay, this is really going to go for gold. You want to see this breakout probably over the 255.70. With NVIDIA earnings on Wednesday after the close, this absolutely is going to make in my belief, determining move, directional move, when that news comes out. TLT is not all that insightful. It continues to compress inside of this range over here between our two extremes that we've been monitoring, no issues. And the energy sectors where we can talk about possible slowdown, R word, recession maybe. If we're thinking about demand for energy, why are we not having output that requires obviously input, specifically from the energy sector? The weakness here is it's not the end of the world. We're not making these huge new swing lows, but definitely not trending higher with the remainder of the market. So keeping that as a back pocket idea. About the fundamentals.
Come on back down. Come on back down. All right. It ain't gonna be so bad. Yeah.
The best outcome for a lot of these different looks would be that we make a new high. If we make a new high in the ratio, bulls on parade, we're looking good. I would tend to feel confident about the bullish nature of the market. XLF has been in this mild pullback.
Yeah, let's see.
Flag out of the ratio. You know that the structural chart looks great, breaking out to the all-time highs. I'm not worried about that. XLV looks
you got a divergence there.
Back in. XLY, just like the XLK, needs to make a new higher high.
So
the daily 50 estimated gold moving average on all of these charts.
Let's see.
The XLP, the lower high here, it's the inverse of what we just talked about on this chart, right? You want to see a lower low under the 50.
So you can make that money back.
Watch those closely. Sector posture. I think as the market has been balancing, right? If we just go back to the S&P, this is really a balance here. So the market's been balancing. I don't think this is too insightful.
See,
that the next move when the market makes
I should have the extreme zones marked.
And be confident in the move, or
right.
a lack of confirmation and say, "Whoa, I'm not going to take this breakout. I'm not going to be long here near all-time highs." Utilities should not be on a relative basis outperforming. Right? That's how you would use this. I don't really think it's all. It's fun when the market's balancing. It's decent to look at, but it's not.
Come on, baby, have that breakdown. You know you want to.
On versus off grid, rinse and repeat the commentary. New highs become great. New highs become great. New highs become great. Same thing over here. New highs become great. We'll watch out for that if the market tries to break from the balance range. If the market breaks from the balance range and none of these charts make new highs, again, alarm bells should start going off. Let's jump on into the Japanese yen. We talked about this on Wednesday, and thank you so much in the comments section.
So let's take something off the board.
Some leniency on the pronunciation of the Nikkei index, right? Nikkei is how we say that one, apparently.
Nikkei.
Lower high of
Nikkei. Nikkei.
Equal lows, basically, yet no one seems to care about the
going all the way down to barely had anything. A little bit of room to move. A little bit of room to move, but there's a lot of upward pressure. It's not going to let it go down too far.
Mentions of it in the pre-market shows.
Got two directions going at it, head to head.
The end of the world, especially noting that the Japanese index itself, the Nikkei, actually made it back up to like on a relative basis somewhere in here. The move in the USD JPY is really more so attributed, in my belief, to something quite literally like the dollar moving lower on Powell's continued commentary about changing tone about economic policy, right, or I should say financial policy there for the Fed. So this is why I believe that the yen is continuing to drop. If we look at gold, threatening a continued move higher. Of course, traditionally would start to suggest, okay, it's just kind of a flight to safety looking chart, but none of the other charts we've seen would really reinforce that. So to me, gold is a much more of the territory for a technical breakout of, as we've been talking about for a while, right? This is one of the longest standing cup and handles I think I've ever seen. So a technical breakout more so than a flight to safety is my view of gold currently, especially with the dollar moving lower from Powell's commentary. Expressed as a currency, it would also make sense that gold is headed higher. Rates continue to stay stable, which is a good thing. Remember that interest rate volatility is painful for the market. Oops, circling the wrong thing. Interest rate volatility is painful, even if it's in theory, quote, right, the proper direction. Volatility here is painful for the market, so on and so forth. This, I know it's very short-lived, but it's one day down there. Very painful for the market. So these things, right, need to resolve. And as we're getting this resolution lower, I think that this makes sense based on all the commentary from Powell so far. And a similar comment would be made here in the inverted ZT, the 2-year yield, basically. Rolling over, staying stable. We know that we panicked over there. And of course, now things are resolving. As we take a look at the actual Fed tracker tool, let's jump on over to this. I think the market's possibly agreeing with my stance, which we got into on the real estate sector chart, which is that a single 25 basis point rate cut is probably the most appropriate. Even after Powell's commentary, the odds here remain at 76%, which is, in my opinion, where they should.
All right, I'm going to take that.
Too fast and really inappropriate from a services
and
perspective.
I might go long right there. There's a bottom here, bottom here. This could be a consolidation zone from what it looks like on the higher time frame, the 5 minute. Right there and there. Which is pretty much.
I know these are flash, so we'll get the revisions later. I think we get ISMs over the next couple of weeks or so, but
this zone here from here.
Not really what you want to see if you're looking for services inflation to continue to lower. And manufacturing PMIs coming in weak, not only underneath the forecast.
The only way to deny that is by it breaking.
Also doesn't really suggest much improvement on the R word recession. So again, this is not a direct call, but it's probably a call to say that, hey, if you cut
over here we have the cycle analysis pointing up, the hyperwave turned green. If we look over here, the negative money flow started to dissipate. So needed to at least get down to here, I guess.
And this reporting is not responding yet. So that to me is a slight concern. Before we get into the Friday session, let's go out to GDP because the Atlanta Fed did revise their GDP estimate from like a 2 point.
And on the smaller time frame, it's definitely in its downward direction. This hasn't turned green yet. This is negative. This is like a negative bottom area. With this,
that a single rate cut is maybe appropriate. Anything more than that, too much, and that's your Atlanta Fed GDP.
As support.
Let's go back to the calendar.
Let's pull it out a little bit so you can see it
better. What we want to talk about from a fundamental data perspective.
Right here.
Might be
Let's see
how that happens, but really, it's
it was buying pressure was stronger than selling pressure.
On Thursday, the forecast here is currently
but there's a thing about that. They say, and it might be proven right here. They say if it's stronger buying pressure and weaker selling pressure, and that's your support or resistance, and price is moving towards that direction, that suggests that there's weak sellers. Like here, how selling was stronger than buying. As the price went up to it and gets in it in the zone, that sellers are weak. Otherwise, they would have just bounced off of it. So, with that's what they say, right? And we have more buying and selling here, and we are in the zone, and that's how they put it. So,
I think it could be a melt up as we anticipate or await rather more information from releases like this Friday, September 6th being one of those big deals. As we take a look at the earnings calendar going forward, NVIDIA earnings after the close on Wednesday. It's capturing everybody's attention, and rightfully so. CrowdStrike is going to get mixed in there, Salesforce and lower tier tech stuff that you can pay attention to. Affirm, Okta, Pure Storage, right? HP feels like a dinosaur these days. Dell, another dinosaur over here. So it's all eyes on NVIDIA earnings. Everybody knows that. We're going to watch to see how they come out, and we'll sort of take it in stride. What does that mean from an options trading perspective this week? You're probably going to think about implied volatility and not wanting to get IV crushed if you're trading NVIDIA. So please be mindful of that and just understand that you're paying an inflated premium for possibly less of a delta move relative to that. Like the percent return is not going to be, it might not even be worth it in some particular instances, specifically on the Wednesday session itself. So NVIDIA earnings, all eyes on it. I don't have any forecasts for this stuff. You guys know me. We'll look at the data in hindsight. I never, ever try to predict what is going to happen on earnings. It's some people can do it, and kudos to them, but for me, it's not worth the research, the effort for a 50-50 coin toss, because you could have a killer earnings report, but if it's worse than the market's expectations, it still moved down, right? So there's my brief disclaimer on Wednesday after the close. Let's get back on over to what we do best, though, which of course is just the technical interpretation. Let's jump through some of our supporting evidence. TLT ratio to the S&P I think is worth talking about because we had this panic spike, but everything since has been this downward draft here, not really indicating the flight to safety continuing. I would be much more concerned about this market, and I would say, wow, a second leg lower, a big detrimental downtrend could unfold if we made a new pivot high. Does this look like it's about to make a new pivot high? I'm not seeing it currently. Let's take a look at bonds in relationship to themselves. The downdrafts and the fact that they're all in sync now is bullish. It's not just like, hey, we know Powell's going to cut rates, but we're still remaining elevated here. Everything's working out. Again, it speaks to risk appetite being increased. Credit spreads, same concept. Notice that we have a lower high underneath the key inflection point, and we even have a lower low underneath the previous lows here out of the SHY-HYG spread. So, what does this tell you about risk appetite? Nobody seems to be overly concerned about a credit event. This would sort of be bullish for equities down below. As we look at the HYG in isolation, this one makes me laugh. I mean, this is the junkiest of the junkiest, right? HYG is quite literally junk bonds. They are risky bonds. And the fact that this is performing well, again, speaks to sustained risk appetite for equities even at this point. You can even jump over to something like the LQD. We did this on Wednesday, where you can see that even corporate grade, not junk, but corporate grade bonds are still getting moves higher here as well. Nice little equal high into that Friday close. So all set out of risk appetite. Bitcoin would reinforce this as well. But I will stand by this until it changes and there's mass adoption, I should say. It's a risk asset until proven otherwise. And the fact that it's over, let's call it 61K, risk appetite is bullish, not one-to-one with the market, but you guys get the tone. Here's where we can really talk about breadth, and we were alluding to this when we were discussing the market internals. Look at the massive improvements out of new highs versus lows as the market's grinding back into that equal high. Huge improvement there. That is bullish. The S&P components over the 50 SMA and 200 SMA both seeing substantial upticks in last week's worth of trade. Once again, you're not seeing sustained bearish pressure across the components, and this would also be reflected with ding, 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 you betcha, the RSP equal weight S&P 500 ringing in a new all-time high on the Friday session.
RSP.
Is it bullish? Is it bearish? This speaks to the broadening nature of the market rally that we've seen so far. To me, this is absolutely a bullish indication. If we look at the QQQ, this supports the thesis or just the general comment we made not too long ago in today's episode.
The NASDAQ
is where we might be looking for shorts. The QQQE yes, it's like 1-to-1 with its weighted component or brother down below, but it's not making a new high like the RSP. So the fact that the S&P 500 is a broader index, not just obviously concentrated in tech, although that's arguable,
Damn.
it is why it's, in my view, air quotes here. Nothing's ever 100% safe. The S&P is a safer long at this point than the Nasdaq, which is so concentrated. You can see that reflected in the equal weight. Let's jump on into the volatility index. VIX is coming down. Set a lower high. It didn't really accelerate aggressively, like up to 2050, for example, on Thursday's engulfer. So once again, it's a bit more comfortable for the market. As an indication, the VVIX, same comment here. It got to 120, but backed off and was closed underneath 103 on Friday. So volatility not as much of an issue. If you're someone who also tracks the VIX futures, or I should just say volatility futures, then you should update your contracts over here. They're now in the next month's expiration, but well above contango, right? Over the zero mark, and you can see the same thing reflected here. Monthly versus 9-day, and the 1-day also moving lower. If you did not tune into the Wednesday update video, one of the things we can do real quick together is remember this day. We have November 7th. It's the first time we broke from an elevated 1-day into the lower bound. November 7th, right? Let's go back to the SPY. Let's go back to November 7th. November 7th is right around in here. And the pullback from the market was over, right? So we just did something similar. We had an elevated 1-day. We dropped down to the bottom of the range. Is it possible the rally's over, but rather the rally is going to continue? The pullback is over? Yes. You get a similar indication over here. A sustained period over 1275. You first hit the zero mark on April 29th. It's not really a zero mark, but just the bottom of the range. April 29th is this segment right here. The pullback was over, and we continued to grind in the upward direction. When I was talking about a melt up earlier, I think that this is a supporting piece of evidence for that sort of thesis based on the 1-day. Let's jump into our core list of companies. Let's get the job done. I've got 2 additional ideas to share with you after this, and then we'll wrap it up. You can enjoy your weekend. What do we see out of Microsoft? I like the fact that we are getting consolidation here, and I like the fact that there's a longer lower wick on the daily bar underneath 416. There was an attempt to get over, right, for a brigade bolt here, and I think that this lower wick gives us, to me, it's a failure of the sellers to go lower, right? Basically, what happens is you make a new bar-to-bar low, but you close back inside of that Thursday range. So as long as Microsoft is over 416 in the early stages of this upcoming week, I would be thinking about rotations into the equal high, if not higher high, into this previous pivot. That's what the daily looks like to me. You've got a point A to point B with a pullback to C now, and as long as we can hold that key level, I think you're at least back to B, if not, let's call it D over time. Not to get too fundamental with our alphabets, but you get the idea. What do we see out of the Friday close, right? If stronger sellers were here, that would have, in a more bearish market, yielded a lower high underneath 416 for a close under. So we'll keep very close eyes on it. I'm not just saying blindly long this thing as soon as the market opens up on Monday, but you can start to envision how maybe like hourly inverted hammer shoulders, here gets you back here. And that point B retest we were just describing. So bullish on Microsoft over 416, under 416, call it for what it is. I think that a stronger retest.
See a pop coming to the upside.
Is definitely in play. Notice the equal highs that led to this.
So maybe.
Microsoft's a really interesting watch around these 2 key levels.
416 something going on, some action going on there. I think it's trying to coil up like it did right here. The only difference is this one had an overflow of sellers.
Here's the original range.
This one does not.
Early on Wednesday, Thursday gaps up, no gap fill reversal, and on Friday broke through, no higher low above. So cannot break through to the other side quite yet on Apple. If you guys know the band, put it in the comments section. Any consolidation in here is just neutral. We'll give it sort of as many opportunities as it would like over 227, but at a certain point, if we're just consolidating after these 3 failed breakouts, I'd be very, very open-minded and willing to short Apple under 222.50 into like a 218.50, 214. You can only fail a number of times before it's like, okay, enough's enough. Any sort of weakness, and we're just sort of jumping on the opportunity. So that's Apple. Next up is NVIDIA. As we talked about, earnings are right around the corner here, Wednesday after the close. So be mindful of your options implied volatility. As a matter of fact, what we'll do with you right now is just throw on the options selling sets. And IB rank is actually suppressed from where we were on the August 5th. See whether or not this increases early on in the week. I
see something here.
it's not as bad as it was. So we'll continue to monitor those
It's
premiums.
right here.
Now I thought it
See
really
this
works.
action
When
here?
like
Let's
an
turn
85
this into
to
white.
80% IVR. Not the case. Anyways, let's bring back a normal study set.
This.
And we'll talk about the chart. So, lack of follow through on the bearish golfer. We
This.
closed underneath a pretty key level there. Double inside bar could not break out. Failed, and now we should right back inside. So, what's the name of the game? I would tend to think bullish consolidation.
I'm thinking this.
Equal high here,
Because that's like coiling up right there. You know?
Earnings, of course, remember what we said earlier, markets have a very short memory. The two previous earnings cycles, which really defined AI.
I would like to see it on this one, though.
Is bullish, right? People, if the market gaps up, great, right? Kudos to everybody who's like, oh, look, previously it gapped up. Great. If that's your approach, you do you, but you guys know me. I'll be taking the risk-first approach, which is to say, hey, do not want to hold options through that. I've got some tucked away in the long-term account. If it gaps up, great. If it gaps down, fine. Doesn't really change my multi-year thesis unless there's something crazy in the report. But anyways, from a technical perspective, I like the high and tight consolidation. Obviously, huge recapture here. Any higher lows were available over this 118. The fact that the sellers couldn't even pull back after Thursday, it's got to be bullish in the short term. That's my take, at least out of it. I would only change my tone to bearish, just to play devil's advocate, on something that looked.
Whether it's a last second bake sale, Taco Tuesday, or a meal for your future in-laws, it's going to be great. With McCormick by your side for over 130 years,
McCormick.
It's going to be great.
Delicious. Delicioso.
That's lower high beneath that 118. Next up, Google.
Google.
The weakling of the bunch, and we've been talking about this, but generally it never got in gear off of the August 5th low.
All right. It turned green on the higher time frame, so that's good.
And now it's starting to suggest a possible lower high here. From there, that would be like a weekly
low.
Now, because the daily is a higher high from here.
This could be, like I said before, a consolidating zone until it breaks.
That we might want to pick on a little bit
here. Right here.
So consolidation that's below 166.50 with breakdown lower highs under 164.75. Target 161.50, the midpoint of the range for this origin of that rally. And really, if you want to go full bore on it, it's going to be look above and fail. Right? Target should technically be the bottom end of the range at 156.50. We would aim for risk reward that maybe that's something like this. So that's Google in a nutshell. I would not really be bullish on it yet until it's back over 166.50, possibly getting an equal high breakout over 169 to target a stronger inflection at 173.25. Amazon, what's going on with Nancy? Let's go back to a daily chart. These daily bars are pretty important here. Overall downtrend. You guys know me. I'm not a fan of a trend line, but when they're this precise, it's at least precise.
That is precise.
Short-term head and shoulders that can develop here underneath 176 for a possible gap close, 200 SMA test. Even like any higher lows out of Amazon walking forward.
Let's take that.
To make more of a stand, and your second test after a higher low, like here, would be the more constructive break of the trend line. Any continued consolidation. Let's go down to the hourly now, actually. Ooh, look at that. On the hourly, sorry for the zoom craziness. On the hourly, it's actually starting to suggest a little bit more of a man rate, perhaps. There you have it. So there's your gap close. That's that 176 breakdown we were just talking about. But if we're going to get constructive to the upside, it's really got to clear this area. Because remember, 181.80, which has been removed since the gap closed all the way, new levels, but 181.80 was a gap close. So the fact that you've got this we call these power lines, right? Where there's just a lot of resistance, daily 50 SMA there. I'd just be very cautious. Like day trade scalps, sure, be my guest from point A to point B, but for longer term longs out of Amazon or just higher confidence longs, probably want this higher low brigade bolt over 181.40 is now the new level. Let's jump on over to Metaverse, see what's going on with Zuckerberg's Fantasyland. New all-time high tech Thursday session.
Keep on swapping.
So it starts to look more to me like look above and fail. Already moved to the bottom end of the range. Very, very cautious around 524.25.
Zuckerberg, the guy that loves selling people's information. He's a data collecting service that everyone loves to give their information away for free. It's the reason why I don't like Facebook.
Thin structure here, absolutely. That's a no-brainer. Day trade scalp right into 524.25 into 517.25. Then beyond that, I would certainly be putting my daily higher low thinking cap on up against something like your 503.50. It's your daily 50 SMA. You can see it here. Fine. 1, 2, pull back. Maybe it's like a daily double top or whatever. This, then I would be thinking lows, higher lows. I mean, the metaverse is one of the first names in the tech cohort to make it right back up to all-time highs, outside of, ironically enough, Netflix, right? So thinking about that out of this particular chart, 524.25 is the key level. Consolidation is bearish until proven otherwise. Under 532.50, watching for the breakdown here. Daily higher low pullback for 503.50 test. Any consolidation that does not break and possibly gets over 532.50, I would let this set up a bull flag or whatever, and then brigade bolt it into all-time highs. Tesla, what's going on with Mr. Musk? How are we making out over here? You got to give credit where credit is due. The failure of the engulfer, just nasty close on Thursday to really get any follow through into like the breakout area here, 202.75, is pretty impressive. I mean,
I don't know. I kind of think that's a bad idea, but
I like if you just draw
we'll see.
Original gap down range on earnings, right? I like that we held inside of that 215.25 on Friday. So consolidation here does its thing. I would brigade bolt there, basically just higher low out of those highs. Over 226, bottom end of the gap here, 234.15. Gap closes 246.25. If we were to pull back a little bit further, there might be a short in there, but if you take a look at the hourly, my concern about the short unfolding is now you have support here, you have this, you have this. There's a lot to battle on the short side with these particular levels in between what appears to be the larger range that's available to retest 202.75. So I've got some reservations about trying to short it. Once again, if sellers were going to make something happen, the open on Friday at this level should have yielded like lower high consolidation and then the flush to get there. It just didn't happen. This consolidation seemed more bullish than bearish to me. Next up, JP Morgan, just like the XLF financial sector, huge break,
see,
all-time highs.
My problem that I've always had with failed trades is that I got so used to the top and bottom scenario when you're scalping and trading. It's ridiculous to try to find tops and bottoms because then you'll be buying against the direction. That's what always happens. You're buying in tops and bottoms, right? So your trade is going to turn against you, no matter what. Before it goes with you, right? But I guess the psychology that I had that if it works on the longer time frames, it could work on the shorter time frames. Yeah and no. It does work-ish, right? But that's not your objective, right? Your objective is to short-term trade, right? You're just trying to trade off the volatility. So you don't want to really get a position that only God knows how low it's going to go, right? It's gonna if you're trying to chase the falling knife, right? In a scalper day trader scenario, you're just going to lose money every time. And yeah, I'm past that point now. So it sucked though having to go through that journey, having to realize that every like more than 50% of the time I lost trades trying to anticipate a bottom. Now I think my average is a lot better. It's like for every five trades I might lose one. So 1 out of 5. Most of the time I'll try to break even if I'm not comfortable with the trade. So as long as we can consolidate up here, I think this is bullish consolidation. We'll have to change our. And I think this is about to get bullish. So I'm going to go ahead and double down right there. Much more severe than NVIDIA. This breakdown is more aggressive than NVIDIA. I was sort of more along the thought process of, all right, where's the lower high so we can continue to short this thing possibly. So that tone has been changed. And I think rightfully so, since we've recapped some of these volatile opens at 150.75. So that consolidation, as we just pointed out, bullish cupping handle, looking for the follow through over 159.25. If it's going to be like, wow, you're flip flopping all over the place. This guy's pretty good. I'm going to have to research his channel now. Like he gets really into detail about stuff. And I'm not even that detail oriented. I'm just trying to find a winning strategy or a scenario where, you know, it's
Is that familiar or what? Man, this thing did absolutely nothing last week. It's completely sideways.
Profitable.
Inside of the inside bar range. There's the inside bar. Here's the more
But if you know your
inside.
shit, then you know you ain't gonna have to try to find it. You already know
Quite, like if you look at something like MU, we had said that there's
MU. I heard that used to be a good swing trade.
I would be watching this one for a look below and fit. If MU is going to offer a bullish setup, you're just looking for this. This right here,
Years ago, used to be the stock. The MU and AMD. Those are the ones that everyone loved to swing trade.
Let's go 25 on that. Let's go 50 up here. Numbers on, you guys know the rules.
Okay.
Like this is probably what I would interact with, as long as NVIDIA earnings go fine.
I think I'm gonna stop this video now. I might make another one, but I'm gonna stop this one.